Morning, Steve Free in Chicago with the morning grain comments. Well, overnight prices started out a little bit lower, came back to unchanged, and now are higher. I think personally the grain markets are doing a poor job of rationing demand. I think prices need to go higher to slow demand. I think that we've seen some headwind headlines in the financial markets that may have caused some resistance in the grains yesterday. The Dow now is below the 50-day moving average. We're also noting that the dollar is above the 50-day moving average. For the Dow, this is the first time since November that it's been trading below this support. We also note that crude oil is kind of stuck in the 52.50 area, but there's a lot of different opinions on what happens to crude oil. First is long-term moving to electric vehicles versus gas. And short-term, post-COVID, seeing a big increase in demand as people go back to traveling again. I think the market is disappointed at the amount of vaccines that's being rolled out versus the demand, and that offered some resistance after the Fed yesterday talked about the U.S. economy moderating. As far as the grains are concerned, South America, we're still looking for lower crops there. Some of the rains in southern Brazil is slowing harvest. We also note that rains are occurring in northern Argentina. That might help crops there, but the south is dry. We also note that the truck strike in Argentina is slowing supplies to the port, and that Brazil still, truckers are still saying they're going to strike on Monday. We are hearing that there might be some more soybean sales to China announced today. They may be done for a while in buying U.S. corn, but when we look at the 14 million tons that they have bought from U.S., the 5 million tons Ukraine, and 3 million tons from Brazil, that's 22 million tons. Some people think they'll take at least 25 million tons or more. If they take more from U.S., it drops our carryout to levels that would suggest corn futures need to trade up to $6 to ration demand. Over in the beans, we noticed that, especially east of the Mississippi, various people are saying that some crushers are bidding up for beans to try to crush for some meal sales they have on the books. There's also talk that some crushers are not offering product after May. So I think that the soybean futures prices need to rally at least to $15 to try to slow this demand curve. And if Brazil's soybean harvest is late, then we could probably see some beans switched from Brazil to China to the United States. And that tightens our carryout and could actually drop it below 100 million bushels. And finally, in the wheat market, we're still trying to assess global supply in wheat for exports. Russia, Europe, and now Argentina are all kind of weighing all the different options they can to try to preserve their domestic supplies. The higher dollar is hurting wheat prices, but I think that wheat prices will follow corn higher if corn trades higher. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.